All right. So before we begin with the second segment, which is a quick analysis of Niva Bupa ka business, okay, first let's just take a very quick look at the three business segments within health insurance. Let's just get some idea of the industry. Okay, not very exhaustive, but just let's get some flavor of the industry and just understand three business segments in this industry, and then we'll jump to Niva Bupa. All right.
All right. Okay. So in this chart, I'm talking about the three business segments within health, which is the government business, group business, and the retail business. The government business is essentially the government health insurance policies, okay, which are primarily provided by these public insurers like national insurance and oriental insurance and what have you. Group business is the corporate business. Like say you if you are a corporate employee, let's say if you work in TCS, Tata Consultancy Services, then and if you're covered by within TCS, you are covered by, let's say, national insurance or oriental insurance. Okay? Then basically you are a part of the group business essentially because you have been provided a corporate policy which covers not only you but your family. All right. Okay? But you also could take as a retail customer, you could take a separate insurance cover, health insurance cover as well. Okay, right? So that is the retail business. Okay. So these are three business. And if you see, retail contributes 40% of the premium, group around 50%. And then you have up top, you have uh, uh, government business, which contributes 7% of the premiums. All right. Now, let's go further. All right. So I know this is a busy slide. Don't get overwhelmed. Just first look at the headline in blue, which is quite interesting. So the government business covers 30 CR lives, okay, at a premium of less than 300 rupees per life per annum, because this is basically welfare by the government. Okay. All right. Uh, and then you have group business, which is the corporate policies. Okay. 20 CR lives are covered in this business, okay, and the premium of around 2,300 rupees per life per annum. And then you have the retail business, which covers only 5 CR lives, okay, at a premium of just under 7,000 rupees per life per annum. All right. So retail may you have only 5 CR lives covered, okay, right? But you get a higher premium per life. Okay. Now, if you look at this chart, okay, these bars हैं, these are the health premiums, okay, and these lines are the number of lives. Okay. So if you see this blue line, this is the group lives. So if you see group lives covered have been steadily growing. Abhi almost 20 CR lives are being covered. Okay. All right. As more and more people join the workforce, you would have more people being covered by their corporate policies. All right. Yeah, and the reason why the premiums are so low per life, because their company would be negotiating with the insurer, right, on their behalf. All right. So the premiums are lower, right? And then uh, this line. It was at the number of lives covered in retail was 3 CR. Now it's 5 CR. Okay, so although there has been a growth, but for the last 3 years, it's been range bound. It's around 5 CR. Okay, COVID did give a bump, but after that, the number of lives covered by retail business is only 5 CR. Okay, right. But FY24, the data is yet to be released by IRDAI. Okay, but it's this segment is poised to grow in the future. Even some of the corporate employees, as more and people join the corporate workforce, okay, even many of them are likely to take a policy outside of their company. So they'll be a part of both corporate and the retail business. Okay. All right. So, but if you like sum up right now, I know there'll be an overlap in the group and retail even now. Okay. But if you right now just sum up all the three, these numbers 5, 20, and 30. So around 55 CR lives out of 145 CR lives are covered in India. So that's less than 40% of population is covered in India. So there's tremendous potential for growth in this segment in health sector. All right. Okay. Right. And I would say in both in group and retail. Okay.
All right. So in this spreadsheet, I have these three standalone health insurers listed. That is Niva Bupa, Star Health, and Care Health. These are standalone health insurers, or that is SAHI companies. ICICI Lombard, on the other hand, that's a multi-line insurer. That is, it's not only present in health, but it is also present in motor, in fire, in marine, etc., etc., in all these insurance segments. All right. Yeah. So, and these three SAHI companies, standalone health insurers, okay, right? They have a predominant. They are predominantly present in retail. Okay, as we would see. All right. Yeah. So, any which ways, if you see the price to book that Niva Bupa is demanding, okay, it's 4.7x. It's around 13,500 is CR is what they're demanding. The price to book is around 4.7x. Star Health in the stock has been beaten down a lot. Yeah. It's right now it's trading close to 28,000 CR, which is which is four times book. All right. And by the way, this 4.7 times book includes the book value that Niva Bupa will have after the IPO. All right. Okay, so this is the price to book that they are demanding, Niva Bupa. All right. Okay. Now let me flip over to the uh, red herring prospectus of Niva Bupa. All right. All right. So if you look at this chart, yeah, Star Health has the highest exposure to the retail segment. In fact, all of its book, 91% of its book is retail health. Then followed by Niva Bupa, close to 70%. Okay. All right. And then the fourth spot, you have Care Health, closer to 60%. Okay. So say they have 60% of retail exposure. All right. And typically the premiums, as you saw, the premiums that you get in retail are higher. All right. Okay. So it's a more profitable segment in that sense. All right. All right. So I just go to a different section of the RHP. So if you see, right? So what it says here is a bulk of the sale in retail segment is driven by individual agents, right? 73% of the sale in retail is driven by individual agents, okay, because insurance is a push product. So you need to have agents to sell the policies. So that's why the expense ratio in retail segment is higher vis-a-vis group business and government business. That's what this chart is telling us. All right. And also, despite higher expense ratio, despite retail having a higher expense ratio, okay, retail segment has a lower cost of float than group and government because it has a lower claim ratio. So what it says is, see, retail has a lower. If you see this chart, retail has a lower claims ratio, okay, than group and government. Okay, why? Why do you think it has lower? Retail has a lower uh, claim ratio. The reason is because they have higher premiums, right? They have very high premiums, all right? So that's why, yeah, the claim ratio is smaller for this segment. Okay, so overall, the combined ratio for retail is lower. If you look at this number here, overall, the combined ratio for retail is lower than group and government business. So that's why it looks more profitable. All right. Now let me go back to the RHP. All right. So, so if you look at this table here, okay. So if you look at Star Health, Care Health, and Niva Bupa, okay. So if you see Star Health, okay, its market share is in retail segment is 1/3. Okay, it's pretty much 1/3, 30 to 33%. Care Health, okay. Uh, of late, it has put the accelerator button and has managed to increase its market share from 7.7% to just under 10%. All right. And similarly, Niva Bupa, it has a very similar market share as Care Health in the retail segment. All right. Okay. If we go further, okay, if we look at the market share accretion in retail segment, okay, which means which basically means the incremental, okay, market share. Okay. So Star Health has an incremental market share of 25%. Okay. All right. So let's say 25% of new premiums in retail are going to Star Health. Okay. All right. Which means that if this trend continues, what it means is that over a few years out, Star Health's overall market share would decline. Okay. Because it's getting 25% of the new business. and not 33%. All right. Care Health's incremental market share is closer to 20%. Okay. All right. Although its overall market share is 10%, but its incremental market share is 20%, which means that 20% of the new business in retail is going to Care Health, and around 16% of the new business is going to Niva Bupa. All right. So these two, Care Health and Niva Bupa, they are doing a good job at increasing market share. Okay? And Star Health's market share, it already has a very good market share, Star Health. So its market share, if this trend continues, the Star Health's market share will slightly decline over time. Okay, and Care Health and Niva Bupa will get a higher market share over time if this trend continues. All right. All right. So I've just scrolled down a little bit in this RHP. So if you look at the claims ratio for Care Health and Niva Bupa, the claim ratio is it's just under 60%. Okay, both these two companies, and Star Health is around 65, 66%. All right. Now just go down, right? If you take a look at the expense ratio, yeah, you would see Care Health expense ratio is around 38, 37%. Yeah. Star Health is under 30%, is around 30%. And Niva Bupa has a very high claims rate, has a very high expense ratio, 40%. Right? It has a very high, significant expense ratio. And that's why I've marked it in red. Okay. So although Niva Bupa has higher expense ratio, okay, but if you look at the combined ratio, okay, the combined ratio for Niva Bupa is under 100%. Okay. Okay. So in fact, all these three standalone health insurers, Care Health, Star Health, and Niva Bupa, if you look at FY24, okay, their combined ratio is under 100%. Care Health is below 95%, Star Health is 96, 97%, and Niva Bupa is around close to 99%. All right. Okay. Okay. And but we just saw, okay, that we should not just only solely rely on combined ratio to conclude that this insurer has a low cost of float, or it has a negative cost of float. All right. Okay. So let's go forward. Okay. If you look at the underwriting balance ratio, you would see that Care Health and Star Health, if you look at FY24, their underwriting balance ratio is positive 2% and positive 0.4%. What does it mean? It means both of these two insurers, they are turning in underwriting profit. Okay. Star Health turned in underwriting profit in the previous year as well. Okay. Care Health, okay, had an underwriting loss in FY23, okay, but turned in underwriting profit in the latest financial year. All right. But Niva Bupa, it has a significantly higher underwriting loss in both these 2 years. Okay. And that is because it has a very high expense ratio, around 40%. Okay. So optically, if you just look at combined ratio, you may conclude, okay, that it's turning in underwriting profit, Niva Bupa, but it is not. All right. Right. All right. And as I said in the beginning of the video, see, making an underwriting loss is not necessarily a bad thing, so long as it is contained, so long as it is a small underwriting loss. All right. Yeah. All right. So, but if you look at Niva Bupa, the underwriting loss seems sizable. So we'll have to check the cost of float, the cost at which this business has been able to acquire float or acquire funds. That is something that we'll have to check for all these three insurers. So let's do that. All right, so I'm back in my spreadsheet. Okay, so look at the cost of float. In fact, let me go to all right. So if you look at this table, okay, and if you look at Star Health, Niva Bupa, and Care Health, these three SAHI companies, okay, this has the cost of float. Look at the cost of float. The cost of float is positive, meaning these two companies, both Star Health and Care Health, they were paid to acquire float. Okay, खर्चा नहीं आया इनका to acquire float. They were paid to acquire float. But if you look at Niva Bupa, on the other hand, in FY23, it had a very high cost of float. That means they paid around 15% interest rate, so to speak, to acquire float. And then that it reduced to around sub 4% in FY24. 15% में पहले फंड्स उठाए, फिर 4% में फंड्स उठाए. That's what this is telling us. So there's a marked reduction, okay, in the cost of float, but still it's pretty high. Okay, all right. So it would be interesting to see how this cost of float unfolds in the future, and the reason why it is very high for Niva Bupa, this cost of float is very high. Okay? The reason being the cost of float is high is because they have a very high expense ratio. All right. In fact, Care Health and Niva Bupa, okay, they are almost of the same size. Okay, but Care Health has actually done a very good job at keeping its expense ratio in control. Okay, all right. But Niva Bupa has a very high expense ratio, leading to a very high cost of fund. All right. Okay. All right. So in this business, uh, keeping a tight ship, maintaining expense ratio and claims ratio, of course, is very important. Okay. If you look at the ROE metric, ROE is a very important metric for financial services and, of course, for insurers. Okay. So if you look at the ROE, okay, ROE for Star Health is above 15%. Right. So the negative cost of float and the good return on float has helped Star Health deliver 15 plus ROE post COVID. Care Health, it's above 17%. So the negative cost of float and again good return on float has helped Care Health also deliver handsome ROEs. Okay. But Niva Bupa, okay, the ROE is of course they're not beating the cost of equity. Okay. So the high cost of float because of the high expense ratio, okay, all right, has resulted into such abysmal ROEs. All right. All right. So now what I want to do is, yeah, hope you got a good understanding of where Niva Bupa is placed within the other SAHI companies, within the SAHI sector, standalone health insurance sector. Okay. All right. Now let's before I walk you through the valuation outcomes of Niva Bupa, before I walk you through the outcomes of my valuation exercise of Niva Bupa, okay, I wanted to uh, I wanted to show as to how do you estimate the market size of health insurance industry. Okay, and within health insurance, specifically, how do you estimate the market size of retail and group segments both? All right. So let's do that. Okay.